Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, today we're back on YouTube and it's time for a look at Bitcoin, and we're going to be spending a little bit more time going into a little bit more detail today. But first, okay, I just wanted to take a moment of your time to talk about the Green Star Trading Patreon and why I think you should consider joining. So, one of the things I really want to get across, and has been brought up several times by our members, is this is not a expensive subscription service. Okay, you can sign up for 10 quid a month at tier 2 and you can leave the next month if you want. During that month you will get the weekly updates for the major moving markets of the gold, SPY and Bitcoin. I occasionally change out gold for oil or something, but you get a market update each week. You get access to all of the previous educational content I've ever produced, including the Elliott Wave series. You get access to a public Discord with multiple channels where you can discuss things with our other members. You get access to live streams where I cover the exact assets you want me to look at. There's a specific channel for you to make those requests. Sometimes these live streams are 2 hours, 3 hours, sometimes even 4 hours long. And that is just for £10 a month. And like I said, you're not obligated to stay. If you want that and a little bit more, you can join for £15 a month, get everything I've previously mentioned, plus a dedicated series called Watchlist, where I look at the specific assets I'm currently interested in and go into great detail in the analysis of those assets. You also get access to the monthly dividend calendar and stock rating system. So I think it's a bargain, guys, and like I said, my whole mission with this channel over the last few years is to just try and help people get their heads into trading, into investing in a way that's affordable, isn't going to break the bank, isn't going to screw anyone over, and just try and push them in the right direction to help them develop their own skills and their own interests. You know, I'm not a guru trying to market £1,000 program or any nonsense like that. So it's totally up to you. There's a link in the description box at the bottom of every video, and if you want to sign up, feel free, but it is the best way to get regular updates, the best way to get access to all of the benefits I just mentioned, and to all the extra content that isn't available here on YouTube. So if you do choose to sign up, be aware there is a free option, but this is a nonsense option. It's something that Patreon forces upon all of us creators, and it will give you access to absolutely zip. There are 3 tiers, tier 1, tier 2 and tier 3. Tier 1 is just your opportunity to make a donation directly to Green Star Trading to help me continue my work on YouTube, but you will receive no further benefits after that other than knowing that you're a wonderful person and you have my thanks. If you want to gain something from it, then you should consider joining tier 2 or tier 3, the aforementioned £10 a month or £15 a month. Alright guys, thank you very much for your time. Now let's get back to the video. Right, welcome back guys. So Bitcoin be doing Bitcoin things, right? And rallying like buggery. If you're new to the channel, or if you're new to Bitcoin, which might well be the case for the next few months as people pour into the asset class during this autumn period of the 4-year cycle, then I would advise that you stop listening now. You go down into the description box of this video and you go and find the link to the Bitcoin primer on my channel, and you go and watch that first. It's a good introduction to the long-term cyclical behavior of Bitcoin, plus my longer-term Elliott Wave count, which hasn't changed for years. Go and watch that, and that will give you a long-term grasp of what I'm expecting. So I'm just going to talk from this point as though you're a regular viewer of the channel and you know all of that stuff. So without further ado, let's start by bringing up with a bit of a long-term recap our market cycle, bull markets, bear markets, okay, and our seasons. So the finish line is 13th of October 2025. Now anything out in the future is a projection, and projections can vary, they can change, they can be right, they can be wrong, but that is a projection based on prior cycle behavior. So taking the same 4-year market bottom to market bottom to market bottom and breaking it down into the seasons based on the price behavior during that period, we have up until October this year until we top, right? And then we're going to get the next big bear market down into probably a year later, October or November 2026. Could be now both of these are projections. They could be sooner, they could be later, they could be right, they could be wrong, but they're just projections. It has tracked very nicely in the past though, and I expect it to continue to do so. We're now in autumn. Autumn is the phase at which new liquidity enters the market by multiple sources. Now everything from a macro perspective that we've discussed in the past, which I don't tend to talk about much on this channel, is now pointing in that direction. So I won't go into detail. Let's just say a lot of tailwinds coming in regarding net global liquidity, which is, I think, going to be expanding bank balance sheets again, as QT's gone from 125 billion to 65 billion to 25 billion to 5 billion, and it will go to zero, and then it will go into QE. We will see rates come down because the spike in the prices that we saw reflected in EISM data was basically, I believe, people front running the tariffs. VAT import, excessive increase in imports has weakened GDP into Q1 and Q2, and we will see all of that bounce back in Q3 and Q4 with GDP spiking and getting higher. We will see the business cycle recovering. We will keep an eye on the ISM as it is still below 50. Report on business for manufacturing, but I think that is all coming on board. We will likely see rate cuts out in the future as well. Inflation continue to fall, and once the business cycle picks up, the new people will come pouring into Bitcoin with their own liquidity, which is the retail spare cash that will be available due to improving economic conditions. All of these are tailwinds which are going to push the price higher. The problem is the news cycle, which is what the media cycle and news cycle of the tariffs is what's been driving sentiment over the shorter term, which is complete bullshit, right? We've been here before. We've played the exact same playbook we went through in 2016-17 during the last one of the last big bull markets, which was Trump starting a full-on trade war with China, and it had no negative impact, okay, on market liquidity. It actually improved things, and we went off higher across crypto and the stock market. Dollar weakened in that time as well. So we've seen the dollar weaken. We've seen China now starting to stimulate as a result of dollar weakness. They can roll over their dollar denominated debt far easier now. So basically there should be mass net liquidity coming on board, and this should be a major driver of prices going forward, and that's basically the macro picture. The news cycle would have you believe it's the end of the world because of the Trump tariffs and stuff, but the guy's already making deals. We had a deal announced with the UK yesterday. It's a negotiating tactic. It's a bit of a stupid one and a bearish one, which causes unnecessary upset, but we shouldn't consider it stupid because it creates opportunity for us, right? And it's been a great bonus there, right? Buying with dip in the stock market, you've already been rewarded. Okay, so that's the situation I see from a macro point of view. This is the technical situation given the seasons and the cycle. What's the count situation? Primary count hasn't changed for years now, so let's bring it up. The shorter term cycle period of this move up, we've jigged because we've got 3 possible options, but the long term cycle has been the same indefinitely. Super cycle bear market completed in the lows of February 2015. Cycle bear market completed in the lows of 2018. Primary low bear market completed at the lows of October 2022. We're now in primary free of cycle free of super cycle free. The question here, as we progress inside of this latest pivot, which is the 1-2 primary degree projected forward, we move along the bottom part of the trend line of the pitchfork, bouncing as we go, picking up the 60 exponential weekly moving average each time we test it, and we move higher. So the target at primary wave degree is to hit the median line. When we do it, I've got my projections obviously, but it's not a crystal ball, but it draws the price up to it like a magnet. So that's where I think we're going from a geometry point of view. The question is how. Okay, do we go 1-2 here at intermediate degree, 1-2 at minor, 1-2 at minute, and we're on our way now? Or do we get the extended fifth idea, which is this, which is we go 1-2, 3-4, 1-2, 3-4, 5 in an extended fifth minor wave degree. So we've completed 4 intermediate wave degrees already before we do all the work in the primary degree. Or do we do this, right? Which is alternate 1 and then one more big bear market. Now, if we were to do this, we would fall out as expected of this primary pivot pitchfork because we go 1-2, 1-2, right? And we may probably not that deep, but overlapping the prior market would be normal, or getting very close to overlapping would be normal, right? And we'd come back in the intermediate 1-2, break that structure, break this upward trend, move higher. Okay, but that would be the next potential bear market. In the meantime, since everything is holding perfectly, given the geometry of it, we bounce along, we find support, we move higher. We're in a short-term upward trend of higher highs and high lows, within a long-term macro trend of higher highs and higher lows. To argue with this trend is a very, very silly thing to do. Okay, and that's what you must avoid doing. So, we're about to go boom, right? We are hoping, fingers crossed, on the shorter time frame, since we started counting this. If you go back to the video a couple of weeks ago on Bitcoin, you'll see that we started counting an impulse off of this low. In the hope that we were going to pull back into a 2 at a smaller degree still before moving higher. I keep my fingers crossed that's the case, because every opportunity to add while in such a strong trend is an opportunity to make more money. But Bitcoin be doing Bitcoin things, so we can't guarantee that's going to happen. There will be a pullback at some point, but exactly when, that's the tricky bit, right? So, to sum up, we are in autumn. We are approaching the finish line of the market cycle. During this period, a lot of new people will be coming into the market over the next few months as we approach the end line. This will be the exit liquidity for those of us who've been here during this 3-year move who want to unload and sell our Bitcoin to them. That won't be me, by the way. I will not be selling my Bitcoin. I made that mistake during the 2015 to 17 cycle. I will never make it again. I was not prepared to the volatility. I came from equities where there is sufficient and lots of volatility, but nothing like what I first experienced in that first cycle. This is my third rodeo now, and I've gotten better at dealing with it. Right, but every time we go into a correction, right, sideways downward move with a downward slope, a counter trend move, big like this one, or the bear markets like this one and this one, big, just remember that we should maybe start calling these things idiot boxes, because I've fallen for it. I've fallen into the idiot box and acted like an idiot, thought it was all over. All right, but the scale, so the duration, the amplitude and the severity of the idiot box is a direct reflection of the scale of idiocy occurring within the idiot box, and maximum idiocy occurs at the lows. Right, because that's when everyone doubles down on being bearish and it's over, and we're all idiots together. The secret is to remember that it's a pullback in a longer macro upward trend, right? And the same is true of these smaller corrections. You go to an idiot box, people's idiocy, stupidity and idiocy increases as the idiot box grows, and then opportunities are lost because everybody got bearish rather than bullish. Let's try not to do that. Let's try to be bullish and treat them as opportunities, right? Now, the next bigger idiot box, bear market correction, is on its way. It's just around the corner, might be a few months away. Now, when Bitcoin is down 30%, 40%, 50, maybe even 60 or 70%, are you going to buy it? Or are you going to be one of the guys who's arguing with the trend and say, no, it's all over, it's the end of the world, this time it's different, the bears are right? Or are you just going to shut up and buy the fucking thing? Okay? Because I will be doing it again. Right? So I'm sorry to be ranting a bit. I've been there, I've been the idiot, I'm ranting. This is my channel, I can do what I like, and I'm trying to help. So at the end of the day, if you're new, please just do yourself a favour and don't argue with this thing. Right, you wouldn't stand in front of a steamroller, and hope it stops before you get run over, would you? You just get out the fucking way of the thing. So get out of its way. It's going up. It wants to keep going up. Go along for the ride. Don't stand in front of it. All right. And look forward to the next big correction, right? Whatever it is might not be fun, right? It might be a horrible global situation, but it's temporary. The 4-year cycle is consistent, not because it's a Bitcoin cycle, but because it's a debt cycle, and we see it in the stock market. Go and look at the stock market if you don't believe me, right? These liquidity cycles are what drive markets, and the Elliott Wave count looks beautiful, if I'm honest. Whether or not we go into that 1 and then come back into the 2, whether we go into that extended 5th and go into a 3 to come back into a 4, that's the only thing we don't know, and we won't know until it's over. Once it's over, we can judge the severity, the scale of the pullback, how close it gets to the prior wave degree, or the same wave degree of the prior wave, and then we can say, actually that looks like a wave 3. So now we're in 4. Actually that looks like another wave 1, so now we're in 2. But we won't know all of that until this thing tops out. So there you go, that's the long-term view recap that I wanted to cover. We're now going to come over to the other Bitcoin chart on the day time frame. We're going to have a look at a few technicals, classical analysis first, and then we're going to come into the Elliott Wave count. So we are overbought now. Strong bullish divergence we pointed out in the last videos between the lows here, suggesting that we're about to rally. We've come all the way back up to overbought conditions. We've done it fast. We're now back into greed on the greed and fear index indicator around 74, so we're getting a little greedy, and we've got strong bullish momentum pushing us higher. The hope is that we get a correction, right? So the daily time frame, we came back through the 250 exponential moving average. which is a signal that we're often going to find a low very soon at that wave degree. We did, just as we did back here, just as we did back here. Okay, we're now back above that, and on the weekly time frame we're tracking above the 60 weekly exponential moving average, which has proven strong support again, and now we're pushing higher on the weekly time frame. These oscillators are nowhere near as extreme. Bullish divergence carried over onto the daily time frame, and we've now got a crossover on the MACD of the average through the signal with a little green bar on the weekly time frame on the histogram here. We're still not overbought on the weekly time frame of the RSI yet. So that's the picture for the classical analysis. Above all major moving averages, all now pointing up. So let's now come into the Elliott Wave count, shall we? So let's start with the wave 3 extension primary count first. I've recounted this low, as I'm sure my patrons would attest to, since I shared a video update earlier in the week and last week. I've changed this probably half a dozen times already because it just keeps extending. Okay, so it just keeps going more aggressively than I was anticipating. But there's no arguing, I feel, with what it looks like. Okay, this looks like 5 waves up. So what we're anticipating now, what we're hoping for, is a retracement, right? Now we saw with this larger retracement into all of that prior structure here, we made it down to the 50 to 61.8 target box, right? This is when we were anticipating a load to come in, and we saw bullish divergence. We were hoping for a touch into this support, but that got front run. Front running is very common. So if we do it on the larger time frame, it's likely we'll do it on the shorter time frame. So let's find that major support level. It's all around here. Prior highs. Right. We might come back into the 50 to 61.8 here for a wave 2, zigzag perhaps. But we might front run it and not actually get into this support and then pull in a wave 2 and move higher. This is what I'm hoping for. I can't guarantee it's going to happen. We could be 1, 2, 1, 2, 1, 2, and it's the moon, and we're not slowing down from here. I don't think that's the case, as the typical extension behavior should have looked more like this, right? Rather than just a pure impulse. This looks more like a pure impulse to me. So I think that hopefully topping out now in a wave 1. And now we're going to come back in a wave 2, retrace, and we're going to go into one of those short-term idiot boxes, as we're going to make light of it from now. We're going to call them idiot boxes to remind ourselves not to be an idiot, right? So we might be entering an idiot box now on the smaller time frame, and that will be our opportunity to buy and go higher again. Okay, that's how I see the shorter-term price action for the Elliott Wave count. There is a alternative, which is the wave 5 extension, the exact same short-term count, except what we're suggesting here is that we've completed 4 intermediate degree waves. We have to zoom out for this. All right, so we've gone 1 and 2, 3 and 4, and now this is 1 and 2, 3, 4 and 5. Right, obviously not like that. I just ran out of room on the chart, but you know what I'm saying. 3, 4 and 5 are going to come up to here, like so, and that is going to complete 5th intermediate wave, and then we're going to come back at a much larger wave degree, primary 3 into primary 4, which will be the next time consuming bear market. So to just show you the extension count, this is the primary, we're going 1 2 1 2 1 2, and now we're going 1 2 again, and we've got the 3 4 3 4 3 4 to come now. Well, not all of them, because that's intermediate. 3 4 3 4 3. Yeah, we've got 3 3s and 4s to come until we peak in the primary wave 4. So we've got a lot of work to do. But when you look at how violent these bull markets can be in the autumn period of the cycle, it's not unbelievable. It really isn't unbelievable that that's about to play out. Okay, so just keep that in mind. Now, bearish count. Is there a bearish count? The only bearish count I can see is this one. This is the idea that we've completed 5 waves up. Okay, 1, 2, 3, 4, 5. This is the intermediate degree, wave 1, and this is the next bear market. So I think really labelling this WXY is pointless at this point. We're just off 89% retracement. We'll label it ABC and anticipate a flat pattern instead, because, right, how far are we off of the highs now? We got to within Yeah, 5% of the highs, right? So to suggest that this is a B wave or an X wave for a zigzag or double zigzag is kind of ridiculous. It's not impossible, it's just a little ridiculous. Let's just call it a B wave for a flat. So we get A to here, B to here, C down here. That would be intermediate wave 2, okay? And then we'd be off into intermediate wave 3. Bull market continues. So even if we sell off now, it's bullish. Right, it won't be bullish for a few weeks, for a few months. Everybody will start crying again. It'll be the end of the bloody world. The idiot box will expand due to the scale of the idiots within it, but it will eventually end and will go higher. So that's the bearish count. That's the primary count. The trend continues. Higher highs, higher lows. We're hoping for one more higher low to start soon and to roll over. On that note, like I said, overbought on the 8-hour time frame, daily time frame. No sign of giving it up now or giving it up soon. That's a bullish divergence. Let's have a look. No, it's just flat out higher highs at the moment. So no bearish divergence building up on the daily time frame yet. Higher highs in MACD, higher highs in RSI. But it does look like a 5-wave structure, so maybe we see some weakness up here over the coming weeks, and if we're lucky, we get that correction back and we can buy again before clearing the all-time highs. If we go straight to all-time highs, then this is maybe just an extended fifth at a smaller degree again. 1, 2, 3, 4, 5, and it will then come back to us. Right, that will be more bearish narrative-wise because everyone will say, "Oh, new all-time high, that's the top," and you know all the same shit as usual. But then we'll be breaking up to go higher again. So just keep that in mind. And alternatively, it's the bearish count, and we will clear this high, and it is a big bull trap up here at new time high, and the bears will be right, at least for some time until we finish the C, and then we'll be off into new all-time highs again. So that's the way I see it. Primary count suggests a short-term pullback is on the cards and will be coming relatively soon, but it will be followed by new all-time highs, if not before. Alright then guys, and that's really all I want to say today about Bitcoin. So like I said, if you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you want to learn all of this stuff for yourself, Elliott Wave and the rest of it, and get access to weekly updates and all the other stuff I mentioned previously in the advert, follow the link in the description box below to the Patreon and sign up. Right guys, take care of yourselves. I'll be back as soon as I can. All the best. Bye bye.